What's up, everybody? It's Mike with Daily Stock Fix. Today, I'm gonna give you a video of the trades I've made in the last 2 weeks. Talk about my executions, the reason behind me getting into them, whether they're good or bad, and also what my strategy is to improve. These last 2 weeks have been pretty sloppy, and I intend to fix them. But first, I need to share them with you so that way I can help you not make those same mistakes. These last 2 weeks have pretty much been filled with FOMO. In case you don't know what that is fear of missing out, and also trying new strategies, mostly the ABCD pattern. While the ABCD pattern has been working well in terms of buying on the C, earnings winners, of course, they still work, which is a good thing. And I will go through everything, all the thought process of each trade. And it's only 6 trades, so bear with me. Hopefully we can do this within 30 minutes. So to start off with CCIH, I'll be presenting these things with on-demand from Thinkorswim. In case you don't know what this is basically a software where you can play back old trades, which is really nice. And we're going to start off, and I'll go to the end of the day. I'm not going to try to do anything crazy. I'll constantly end at the end of the days. But first, it's CCIH, right? Let's start off with the daily chart. So this is this play here. The main catalyst behind it is a licensing deal that this stock received. The details about it don't really matter, as it is not necessarily a huge licensing deal, and also that's not a normal play that we do. This did happen in the second, as you can see right here. We're already listed onto that. And it happened at 10:09 a.m. Eastern, which is 7:09 Pacific. Float is about 14.6 million. The daily pattern here is just a second green day with large volumes. You can see on this day it finished up with 12 million shares, which is pretty decent. And also, let's see what else I could see. The intraday pattern was a breakout over the morning high. Let's go to the intraday so I could show you the my executions and the reasoning behind it. All right, so the idea was right here. All right, let me just scoot back a little bit. So this is how the intraday looked like. All right, I was looking to buy it on the breakout over that high, looking to sell it somewhere before the twos. Realistically, I like to sell them right around 195 so that I'm not stuck in the whole wall of sellers at 2 and possibly not get executed. So we're looking at about a 25-cent reward versus if I cut losses quickly at around 170, 175. We're looking down here about 175 down to 168. We're looking about 7-cent risk. So it wasn't absolutely terrible. However, if you do risk off the previous dip down here at the 53s, you do have a 25-cent risk to a 25-cent reward. So it's however you look at it, right? On this trade, when I traded it, I did risk on the 67s, and I'll show you how that really happened. So it started perking. As soon as it perked, I was filled right on that little mark there, or on that break. Actually got a nice fill of 175, exactly where I wanted to get filled. And after that, we continued. We started downtrending, and that's when I considered selling it at 166, but level 2 showed me buyers, and it just started hanging around. And I sold right at that candle there at 165 when it broke that support of 166. I got out for a 10-cent loss, 10-cent a share loss, which is about, which was a 5%, almost a 6% loss on this trade. I definitely want to try to minimize my losses to under 5%. And realistically, what I have to start doing is, if as soon as it starts looking weak here, maybe give it a little bit of risk, maybe down to, I don't know why these arrows never delete. Instead of putting it, such big risk, cut losses quickly, which is number one rule. I'll probably try to start cut losses quickly at around 170 next time. It's just one of those 10-cent levels. I gave it too much breathing room, and in this case, it didn't work. It would have been nice if I had a 25%, 20-cent reward, 25-cent reward, that is. Because had I had a 25-cent reward, this is shoulda, coulda, woulda. Um, but 25 cents on a $165 stock, that'd have been a nice 50% reward. So next time, like I said, I'll cut my losses quickly if I see it that's starting to break, especially if it has a second, maybe third red candle around 170s, and have a 3-4% loss rather than a 6% loss. And as we can see, the rest of the day, of course, the stock started downtrending a little bit more. Right, we started going down, and it held that support right here at 150s pretty well, which is nice. It just held it all day, and then it started uptrending. Now this is a pattern that I'm very familiar with. You can see it kind of broke it there, but no massive panic. And then in the end of the day, it started uptrending. It looked like forming slightly an ABCD pattern, but very, very extended ABCD pattern. This, of course, is not a clean ABCD pattern, but it did have a strong close, which would indicate likely the next day it would have a green day, unless only if it wasn't the third green day. Unfortunately, as we can see on this chart here, it was a second green day, and the likelihood of it having a third green day is very unlikely. So we'll just skip on to the next day, see what the results were. Once again, highly unlikely, and that's why you don't hold overnight on the third green day. I don't think it was terrible, but the fact that I'm not really following the catalyst that I normally trade, and also, I gave it too much breathing room. I basically sold halfway into this channel here. I should probably sell out the quarter of the channel and not give it too much room to move down. Likely would have been wiser, but I take my losses and I move on to the next trade. So the next trade is CVNA. We're going to go to the 7th, and it happened. It doesn't matter what time it happened. We're just going to move straight into the end of the day. Let me get rid of all these lines so we can analyze it together. All right, so CVNA, we'll go with the daily chart first. So you can see we have there's an earnings winner. It has good volume on the day, right? So if we go back a little bit, it won't let me. So you can just find these with the pre-market scanners, all right? Reports, earnings, and if we go to the intraday, so reported earnings, and this is how it looks like here. All right, so a reported earning is gapping up aftermarket and also pre-market. So this is definitely something you don't want to watch. Earnings winners can run. Now the only thing that you got to worry about is where is it likely going to top? We have resistance, clear resistance at 187, clear resistance at 243, and resistance up here at the 1394s, basically 14. Other resistance you have to worry about is obviously whole numbers, which is the 13s and the 12s. All right, so we have, it's about to open at 11 right now, which is right there. Pretty good open. Considering resistance is up here at the 1160, so you can make 60 cents a share off of the open. I'm not one that buys straight in the open. I'm just not good at it, and because of that, I wait for the chart to develop itself and tell me what it wants to do, so I can maybe do a swing trade or have the afternoon effect, afternoon strength, push it higher. So now that we have all these resistance points put it up, we basically know, as soon as it opens, we have the potential for this thing to move up to the 12s. Once it hit the 12s, we can keep going up. Let's go to the intraday chart. All right, so this trade happened. More information about this trade. The flow for CVNA is 12.03. The gap, the daily pattern is an earnings winner, gap up play, which is good. The volume at the time that I bought it was 4.2 million shares, and the market during this time it's uptrending, so I'm not worried about people being queasy about selling everything that pops up. Now the intraday pattern that I saw at the time of purchasing the stock was an afternoon high day breakout. So let's let the stock form, right? So here we have the morning spike and a big dip, panic, and people can buy into that panic onto support down here at the 1040s. And throughout the whole day, it consolidates. As I said, this trade happened sometime, actually exactly at 2:31 Eastern, which on this chart here, it happens at 11:31 my time. So we're about approaching it right now. So as you can see now, it's uptrending, it's uptrending, it's uptrending. If you wanted to play ABCD pattern, you could buy it on the breakout above that and then risk off that, but that's not really good risk to reward. So we're going to let the actual chart develop itself until it breaks over the afternoon high of day breakout. So earnings winner and the afternoon high of day breakout, that's a really strong pattern, really strong catalyst all together. So my entry at 2:31 was 11:65, so right on this break right there. And right here, the risk, my desired risk was down right around here at the 1140s, and my reward, as I said, was up to the, went too far forward. Let's go back in time. Let's go back. All right. Still not cooperating. All right, so we have the break, and I'm hopefully it can hit the 12s, and if it breaks the 12s, it can continue going on. I just want to see that it can hold this breakout. That's the main concern. As it continues moving up, I would sell onto around whole numbers, and also adjust my risk higher and higher off of intraday dips. So it's hanging around, then it starts pushing up to 12, and it hits 12, and it starts consolidating downwards. And we have this sideways price action, but then it bounces again right off that breakout level around here at the 1163s. And then we break again, and it continues moving. And while this is all happening, I'm selling my shares. I'm selling as it's going higher and higher and higher. My average exit on this stock is 12.54. So I pretty much sold the rest of my shares around here, right before the market closed. I don't have the information on my Excel sheet right now, but I'm very confident that I held overnight and I sold the next morning. So here we go. Definitely did not sell the next morning. Definitely didn't sell the next morning. I sold all my shares there, and no, I did hold overnight. It's just that my average is 12.54 because I pretty much sold all my shares on this run up and left a quarter onto this panic. And I sold on the panic, of course, after it panicked, it bounced and then it went up to 1450s. So it was good. It was a good setup for sure. I apologize for all the lines. That's just how I analyze these charts. I just know how much chop zone there is here. But after it breaks that CVNA, or after CVNA breaks that 1250. And of course, when it breaks that 13, it goes past that 1340s all-time high. This thing soars, and now it's up to the 17s, or I believe it's in 17s, which is crazy. But I took the meat of the move. I took the easy pattern, the thing that I know best, the afternoon high of day breakout on an earnings winner. Yeah, I can't ask for anything better. I made an average of 7.62% on this trade, which is nothing, versus how much it ran up. I was just so, I was so bothered by the loss I had taken the day prior, or the previous trade, which was what was it? It was CCIH. I was so bothered by it, and because of that, I felt like I needed to take profit so I can regain all those losses. CCIH, because it wasn't an earnings winner like this, was a 1-star trade. I rate my trades between 1 or 5 stars. This stock here was a 3-star trade because the only thing I could have asked for is that there was no resistance above it. Really that's it. If it had that lined up to it, it would have been a 4-star trade. What would have made it a 5-star trade if it was an earnings winner, a multi-day breakout, no resistance above it? If it had all those, this would have been a 5-star trade, and I would at least put about 60-70% of my portfolio into this. Fortunately, it wasn't that, so I only went 30-40%. So let's go into the next trade. Next trade is ABIL. This happened in this 8th of the month. So we're already on the 8th. Let's just go to ABIL. All right. So once again, we have a 2-day spiker. like I said, these are not the best setups. One thing for sure that's nice is if you were paying attention on the day that it broke out, this or when it broke out at 115. 115 was a good opportunity to buy, especially since it's on the second day on a breakout and with large volume. So let's look at the intraday. Let's analyze it a little bit before we do that. Actually, let me go back to the yearly so we can analyze it. So on the year chart, we have a major multi-day breakout. It's not clean by any means. I like major daily breakouts that they pop and then they come up and they hold their highs and they curl back up then break out. Those are the ones I prefer. This one, it spiked and then it came down, but then it broke out past the previous high, which is good because short sellers, are trying to short sell around the ones, and then it breaks past it, so it's a short squeeze. That's what happens here, and that's why you see that massive volume is because shorts are getting squeezed, and you want to buy short squeezes. So now we know that I traded this stock at 11:29 a.m., which for my time it is 8:29 a.m. It's not good. 8:30 my time, which is or 11:30 Eastern, is midday. You don't want to buy midday, especially when I tell you what this the pattern was. Yes, this was a major daily breakout, but when I bought it, it was an intraday ABCD pattern, basically trying to catch that morning high of day breakout. And because it was midday, if you know or if you study a lot, you know that midday breakouts tend to fail a lot, and I got caught in this because once again I'm just trying to make plays. There's no plays and I'm forcing these plays, and of course all the plays are morning spikers, all this junk that is spiking in the morning, and I'm just not good at buying morning spikers. Another thing that is cool about or is interesting about it is that this is a NASDAQ delisting notice. And basically what that means is whenever these stocks are downtrending on this and they come under $1, they get a notice from the NASDAQ, from the NASDAQ markets basically saying that you do not meet the qualifications to be listed onto our exchange. A NASDAQ stock needs to be above $1 a share in order for it to stay listed into the NASDAQ. And right when it received the notice, it was at 60 cents. All right. So of course, they gotta bring it up, or else they're gonna go to the OTC market. So what did they do? They got a newsletter to pump it. You can check newsletter pumps. You can find out whenever I see something spiking. Just for reference, this is what I do. I go to trading and I go to top stock promoters. Here you're gonna create an account. You're not gonna get spam or anything unless you ask for it. And you can see everything that's being promoted. Go away, stuff. Go away. You can see all these things that are being pumped, and you can say you see something moving, right, with large volume. Maybe you see something that once again is in the NASDAQ and it's under $1, and then it starts spiking, and you want to see if it's being promoted. You type in the ticker. All right. Let me quickly log in. Let's log in real fast, and let's look at ABIL. Let's see if it's being promoted. Of course, I already know it's being promoted. I didn't even type it right. ABIL. And sure enough, ABIL is being promoted, right? So there's one tool you can find out if something is being promoted. And of course, because the company needs to figure out a way to stay listed, the only way they can do it is by pumping the stock. And that's what causes this. And you'll see this over and over. So this may be a strategy that I adopt later on, just to maybe dig in through the SEC files and look at companies that have NASDAQ delisting notice, and maybe find out maybe they're likely going to be promoted because they want to stay listed. They want to do everything they possibly can to stay listed, because if they're listed, they that at least seems somewhat trustworthy. So now you know that it's not necessarily a pattern that I've traded a lot of times before, but it is something that I'm kind of familiar with because Tim Sykes has talked about this before. So it is a NASDAQ delist pump. Also, the volume at the time that I purchased it was 6 million shares. The performance of this stock is very bearish. As you can see, it's been downtrending the entire time. The market at the time that I bought this was bullish. We're still uptrending. And the risk to reward, let me go to the intraday chart to show you the risk to reward on this case. So the time that I bought it was right here when it broke past that level. You can see A is up here, B is down here, C is right around here, right, at 50s or 150s, and then the D ideally would be at the 169s. But like I said, these things just tend not to break past, break past that morning high in the middle of the day, and because of that, it's an issue. So we'll see what it does. Let me zoom in so you can see it. So here, it's a nice setup. It's starting to move up, and then it comes down. I basically bought right. What was my entry? My entry here says at 155, which is right at the freaking top, basically at the top. And then I stopped out at 141. Like I said, I'm not going to hold until the mid-range. That's ridiculous. It's too much. And then I took a 9% loss. Of course, my size was smaller because I didn't want to risk my gains from the previous trade. But yeah, it was a 9% loss. It was 14 cents a share loss, and it was, like I said, demoralizing. And that's after this. I pretty much said, like, I'm not buying ABCD patterns anymore. At least on the C. If there's an ABCD pattern and it breaks out on the C, then I might consider buying it. And yeah, it was a pretty shitty trade. And then at the end of the day, I tried buying it again. Let's see, later on in the day. Let's see. Actually, no, this was not later on in the day. This is just a couple of days later. Let me decrease my brightness because my laptop's about to die. How much time? I got 12 minutes remaining. All right, guys, 12-minute video. 12 minutes remaining. So let's go to the 12th, right? So now that I explained that one, let's go to the 12th of June. Same stock, nothing crazy, right? You can see how even on the 12th, the same resistance line that I drew before on the breakout, it's still holding. It's still holding really well. So on the 12th at 9:41 a.m. is once again where I bought this stock. Now, as you can tell, it didn't really work that well. So what time is it? What time was it? 9:41 a.m. was the time I bought it, and that is 6:41 a.m. That is right about there. Let me zoom in. What was it? 9:41. Sorry, it was not 6:41. That's 7:40. Am I right? Am I even doing math right now? But basically, I bought it around the 741s. I believe it was right here on the break. Yeah, it was on the second push because the intraday pattern was previous high of day breakout. Once again, it's still a NASDAQ delist pump, and the volume was 700,000 shares at the time that I purchased it. Risk to reward, it was 11-cent risk to 10-cent reward. It was not great. You can. It was probably going to top at the 150s and then cut your losses at 136, 135s. My entry price was at 136. My exit price was at 136. So yeah, it wasn't a great trade at all. The only reason why I thought it had potential is because at the time, I know you don't see it here, but I like to buy. At least I've been trying the strategy lately. I like to buy it when it breaks past that high. Disregard this one here. When it breaks past the previous high, and because it's down 10% on this day and it's under SSR, whenever it breaks past those highs, it tends to squeeze shorts because it's under SSR and they can't get into the short position easily. This stock is a 1-star stock. It wasn't a great trade. Like I said, I'm forcing trades. So the next time, maybe hopefully I don't lose money on the next time. Not true. Except this one, this was not a terrible setup. It was TCS, all right? Let's go TCS on the 15. Let me get rid of all these lines here. So why did I buy this stock? All right, I bought this stock at 10:18 a.m., which my time, that is 7:18 a.m. It's not yet middle of the day, but it's not right in the morning where I like them to break out, or in the afternoon. Float of this stock is 16.8 million. The daily pattern was a major daily breakout. The intraday pattern was an ascending triangle, and I'll show you that in a bit. The catalyst was an earnings winner, day 15. Now, I remember Tim Sykes has said, sometimes earnings winners, they take a while for them to react. And I remember things like SORL and all these things. And I was hoping, when it broke past the 607, this thing's can really squeeze, maybe push up to the 650s, somewhere higher around here at the 650s or the 7s. That was the ideal situation. However, that did not happen. During this time, the market did become bearish. So when the market is bearish, breakouts tend to not happen as much because people are trying to either break even or they're trying to sell into any spike because they're anxious about their profits because it's a bear market and things are not flying as often. So let me go into the intraday. From the intraday, this is the this is the ascending triangle that I talk about. So you can see here we have that ascending triangle. Here's a breakout 607. Let me draw the triangle so you understand. So here we have the triangle, and if we go straight across that way, you can see why I bought. However, the price action basically right as soon as that crack happened, that was time to get out. Let's see if I actually got out at that time. My entry was at 608, right at the climax of that fucking excuse my language, right at the climax of that ascending triangle, and my exit was 59. 59. Or not 59. Sorry. 597. I got out way down here. This is one of those instances where it's just not wise. I just didn't cut my loss. It was probably one of my worst trades I've done in terms of discipline, especially considering how big there's support way down here at 59s, which or 95. That's probably why I cut my losses there. So it was not a good trade at all. As you can see, it was the beginning of a large panic, and it was a fake out. And really, this is just something I wish would have worked. It is an earnings winner. It is an earnings winner breakout. It just didn't work because of the bear market. So quickly, we're going to go over to the last trade before my battery dies. CSLN. This happened on the 16th. Good thing I can still load this. So on the 16th, the important thing is you see this, all right? Is you see the chart. So the reason why I considered this is because it was gapping up. The catalyst on this one was a share sale withdrawal. So they were initially going to sell a bunch of shares, but then they withdrew from that offer, and that's considered good. That means they found another way to finance their whatever they need, and therefore they don't need to do it. And it's just positive. It's positive news, but it's nothing revolutionary like an earnings winner. And that's why it's a speculative position. So the float on this stock is 3.8, so it does have room to move. Obviously, we saw it push up, right? We have support right here on that breakout above. Let me get rid of that trend line. Oh man, we're cutting this tight. We're cutting this really tight. That trend line right there, we have support, and we have more support there, and we're pretty much done. Okay. Then we have resistance right around there. Ooh, 10%. All right, so basically what happened is it was a former runner. All right, we've seen this spiking on the daily chart up there, and it was a morning panic dip buy. So let's see how it worked. So in the morning it panicked, right? But it panicked right to that support there. So when I saw that, I said, okay, risk reward is very small. There's like 8-cent risk, and the reward is about 20, 30, 40 cents. So I dip bought right when it broke past that previous high there at 298, and it continued spiking, and I sold as soon as it hit the next resistance at around the 30s. So my entry was 298, and my exit was 320. I made 22 cents a share, 7.38%, pretty good, and actually came out green on the week. It was amazing. It's amazing when you can size in properly, so you can maintain your gains. And this was the last trade of the week, and this is also the last trade I need to share with you. But yeah, let me just show you what it did. It bounced down, and then it just kind of just went sideways around the threes the entire day. So I think I took the meat of the move, which is nice, and really that's all that matters. So that's it for tonight's video, guys. I'll try to post another video tomorrow going up over any trade that I have until Next time, it's Mike with Daily Stock Fix. You guys have a great day or night, whatever time frame it is for you guys. Peace.